Hi, welcome to a special market update with the equity market, which looks like it's in free fall, occurring over the last day or two. I thought it was important to kind of put things in perspective. So let's look at the S&P. The market yesterday, I'm doing this recording on a Tuesday evening. So on Monday, the cash S&P broke under a support area shown by these dual blue lines. And what that means is this prior support becomes resistance, and we can see how the market stalled near the resistance area on Tuesday. Now, that's still a resistance level, so kind of eyeballing it around 1385 to about 1390. But as negative as things look, and by the way, there's no bullish candle reversal signals yet, let's look at a weekly chart to kind of put in perspective where the market has been and where it is now. So didn't mean to do that white board here. Okay, here's a weekly chart. Notice the highs from last May and again during the summer. And once the market broke under it, that resistance should become support. There's a weekly chart. So the cash S&P is right near that support area. Now, even if it breaks under it on a daily basis, I would want to see a weaker close to say that the longer-term trend may be in jeopardy. And speaking of longer-term trend, let's look at this. The market rallied either from here, depending on your perspective, or from here. So essentially from about 1200, just to be conservative, up until about 1425, the market really has not had any sort of a correction, which is pretty amazing. So in spite of a couple of big down days, I think a correction like we've had should not be unexpected. What would get me nervous is a weekly close, i.e. a Friday close, not only under this old resistance equals new support, but I'd give it a little bit of a leeway. I would give it to a close under the lows over here, which was around the 1340, 1335 area. But just to give you a heads up, the cash S&P is currently at a support level. As mentioned a couple of minutes ago, there are no bullish reversal signals yet. Let me go back to the daily chart over here. So as we get to the lows here, right around the 1335 area, maybe the lows over here on the daily chart, if we start to see a doji or a piercing pattern or a hammer, that could be a sign that the major support area is indeed holding. Now, let's go to the euro. And as shown in these red arrows, these are piercing patterns. In fact, they're almost bullish engulfing patterns. A piercing pattern is when the white candle gets deeply into the black candle. Bullish engulfing patterns when the white candle wraps around the black real body. These didn't quite do that. And just to refresh your memory for those new to candlesticks, if you want a very basic definition of the candlestick signals, you can go to my website at www.candlecharts.com and look at our free basic candlestick glossary. Now getting back to the euro, the market's holding the support zone based on the lows of the piercing pattern here and based on the lows here from late January, early February this year. And notice how well it's holding it. So I think we're at the bottom end of a trading range. This blue zone here should be support. And my ultimate upside target would be up here around 134. I think a 50% retracement should be first resistance. So from the sell-off here right around 134 to the lows here, assuming these are lows, let's kind of round it off around 130. So somewhere around the 132, 131.75 area might be some resistance based on those who use Fibonacci retracements. And of the Fibonacci retracements, probably the most popular is 50%. But the euro is holding support very nicely. And just as a heads up, although there's a black candle wrapping around a white candle, not a bearish engulfing pattern. And for those who have education, you should know why this is not a bearish engulfing pattern. While here we had a black wrapping around the white, it was a bearish engulfing pattern. Okay, thank you so much for joining me, and look forward working with you on our next market update. And also keep an eye out for our educational video newsletter called Highlights. Thanks, everyone.